I think I read a book on it a couple of years ago, and I just told, I guess I didn't completely understand it. And I got the impression that there was sort of a transfer of control from, my company of the real estate in the process over to someone else with a level of trust that would have to be built up. So it's sort of on my list of things to learn more about.
Have you ever heard of something called a deferred sales trust before? And what comes to mind when you know that you can, any asset of any kind can exit and come in seamlessly without having to do a 1031 exchange?
So yeah, I have looked up into this in the past, and I will say I'm by no means I wouldn't even say I'm knowledgeable about it, but I'm aware of it. I think I read a book on it a couple of years ago, and I guess I didn't completely understand it, and I got the impression that there was sort of a transfer of control from my company of the real estate in the process over to someone else with a level of trust that would have to be built up. So it's sort of on my list of things to learn more about, but it's not something I'm intimately familiar with.
Yeah, you're spot on. Yeah, there is a third-party unrelated trustee. That's our role here at Capital Gains Tax Solutions. But it's kind of like a third-party qualified intermediary, whereas that transfer of control for a short period of time. Ours tends to be a little bit longer, right? Depending on the deal and how it's also working out. Think of it kind of like an IRA or a 401k, right? You have like an IRA administrator or a 401k administrator. It's a third-party company. Think of it, and then a qualified intermediary, you're definitely doing that as well for that 45 to 180. Right. But you can invest right back into your own deals and do it yourself. It's kind of like a self-directed IRA, right? Where you can control an LLC, the managing member, majority partner, and the trust can come in and partner with you, and you can run your deal the same way you would have. It's really neat once you unravel it even further. But at first glance, a lot of people think, oh, it's just deferring tax, and I'm just putting the money into the stock market, and I'm not going to be an entrepreneur. And it's like, no, it's actually the opposite. And you can do that too. I mean, you could be totally retired and do that. Most of our clients are entrepreneurial, business, cryptocurrency, and they want to run and invest with partners that they know, who have a good return. But the second part of this is, even though you give up some control from the trustee, number two, you get a new depreciation schedule. Right. So we're doing a deal right now in Sacramento, California. It's a $14 million sale. He has zero depreciation schedule. He has a $7 million debt. And that debt's resetting in a couple of years, or actually in 1 year, from like 3% to like 6.5% to 7%, which is crazy, right? His cash flow is about $20K a month right now. And he's going, wow, I got like the stick coming with the debt. I've got a huge tax of 40% of the gain on $14 million. About $6 million or so in tax liability. And he's like, what am I going to do? Like, if he tries a 1031, he's going to have to take on all this new debt and a new property. And he's over 70. And so we come in and we actually kind of save the day, and that we get him out of debt, get him diversified, get him tax deferred. And then we're able to move right into commercial real estate syndications, all tax deferred. And so that is that part where we focus on, like, hey, what do you get for giving up some of that control? Right. And what are the pros and cons? No strategy's perfect, but that's a little bit more about the deferred sales trust. If people want to learn more, you can go to capitalgainstaxsolutions.com. And we did write a book called Building a Capital Gains Tax Exit Plan. You can check that out on Amazon.